Here's the shocking truth. The US banking system is like a house of cards. One wrong gust and the whole thing comes tumbling down. And guess what? The wind's picking up. Right now, there are forces at work that could topple our entire financial system faster than you can say FDIC insurance. Want to know what they are and how to protect yourself? Well, stay tuned because I'm about to blow the lid off of the biggest financial cover-up of our time. So, everything looks fine on the surface. The US banking system seems rock solid. Banks are posting record profits, the economy is humming along, your money's safe and sound, but underneath the calm exterior, there's a storm brewing that could blow the whole thing apart. Picture this. Banks are sitting pretty with a 13% capital ratio. That's better than last year, but it's still not enough to weather a real economic hurricane. And believe me, the clouds are gathering. Now what's really scary? The banks are playing with fire. The regulators are asleep at the wheel. They're making risky investments left and right, betting big on things like commercial real estate. Now the rules are so loose, it's like they're begging banks to take crazy risks. And it gets worse. We're setting ourselves up for a repeat of 2008. The banks are holding on to massive amounts of uninsured deposits, and if people get spooked and start pulling their money out, it could spell disaster. Now let me tell you about two important indicators. The fire sale vulnerability index is through the roof, higher than it's been in a decade. This means banks might sell off their assets in a panic if things go south. And at the same time, the liquidity stress ratio is back to pre-pandemic levels. In simple terms, banks are running low on easy cash and are relying more on unstable funding, and if a crisis hits, they're in big trouble. So how close are we to the edge? Well, closer than you think. One wrong move, one big shock to the system, and this whole house of cards could come crashing down. The pressure's building and something's got to give. But how bad could it really get? Well boy, you're not going to believe what I'm about to tell you next. So it's March 2023, a date that should send chills down your spine. We saw the largest bank failure since 2008, and holy smokes, we almost had a total financial meltdown. And let me tell you how close we came. Well, Silicon Valley Bank wasn't just any bank. It was the 16th largest in the country, a big player in the tech world, and SVB grew like crazy, taking in cash from all those hot tech startups and venture capital firms that they thought they had made it. But boy, were they wrong. Silicon Valley Bank made a huge mistake with their business model. They took all the startup money and put it into long-term bonds. Now when interest rates shot up, those bonds tanked in value. Suddenly, Silicon Valley Bank was in big trouble. But that's not even the worst part. Word got out about their problems and panic spread like wildfire. In just 48 hours, depositors pulled out a whopping $42 billion. It was a bank run at warp speed. And guess what? The panic didn't stop with Silicon Valley Bank. Other banks started wobbling too. Signature Bank went down. First Republic was on the ropes for a hot minute, and it looked like we were headed for a financial disaster. So how close did we come to a total meltdown? Well, I'm talking inches away. If the Fed hadn't stepped in, we could have seen dozens of banks collapse, and we're talking about a financial nightmare that would have hit everyone hard. But here's the scary part. We may have dodged a bullet, but the gun's still loaded. So what is the biggest risk right now? Ladies and gentlemen, we're going to talk about commercial real estate. So the commercial real estate market is in serious trouble, and it could bring down the whole economy with it. We're talking about a $20 trillion sector that's crumbling before our eyes. And it's not just some small hiccup, this is big, really big. But first, let's look at the facts. Office spaces are emptying out like crazy. Right now, about 18% of offices are sitting empty. That's nearly 1 in 5. We haven't seen numbers like this since the 2008 financial crisis. And it's not just offices. Retail spaces are getting hit hard too, with a 10% vacancy rate. That's 1 in 10 shops just gone. But here's the kicker. People aren't going back to the office like we thought they would. Hybrid work is here to stay, and that means less demand for office space for years to come. And this is where things get really scary. Banks have loaned out tons of money for these commercial properties. And if these properties start defaulting on their loans, banks could be looking at massive losses. Regional banks are especially at risk because they've got so much invested in commercial real estate. And remember those pandemic era loan forbearance programs? They're about to expire. And when they do, we might see a wave of defaults that'll make your head spin. It's like a financial disaster just waiting to happen. But hold on to your hats, because it's not just the big banks that are in trouble. There's a whole other group of banks that might be even more vulnerable, because now we're looking at what they call the weak tail of banks, hundreds of small ones that are way more fragile than you'd think. These aren't the big shots on Wall Street, they're the local banks in your towns and neighborhoods, and they're in hot water. Now here's the worry. If one of these banks fall, it could set off a domino effect. People freak out, start pulling their cash from small banks, and boom, we've got a full-blown crisis on our hands. So how bad could it get? Well, the numbers are looking pretty grim. There's a thing called the Run Vulnerability Index that shows how likely banks are to fail if people start taking their money out. And guess what? It's through the roof right now. And don't even get me started on liquidity stress ratio, it's gone nuts since early 2022. So how safe is your money really? Well, if it's in one of these small banks that's lending huge commercial real estate, you could be in big trouble. Now luckily there's FDIC insurance for up to $250,000, but if we get a whole full domino effect of one bank goes down and then another and then another and another, FDIC only has enough to cover up about 2% of all US bank deposits. So we're walking on thin ice here, ladies and gentlemen. The banking system is much more fragile than most people realize, and one big shock could see hundreds of banks fail overnight. But I know we're thinking, well, okay, how can we protect ourselves against a huge banking crisis? Well, what have I been talking about, everyone? You want gold, silver, and Bitcoin. We've all seen how huge gold, silver, and Bitcoin has been going up the past year. But something that I think is very undervalued out of those three is silver. Silver still hasn't reached its all-time high that happened in the 1980s. So I think the next big mover will be silver. And in the silver market, there is even bigger opportunities with silver mining companies. And with Donald Trump posting the following statement, the idea that the BRICS countries are going to move away from the dollar while we stand by and watch is over. As you can see, in the Trump era, currency wars will be fought, and I expect a war between fiat currencies to shine a light on gold and silver. And that's why I want to talk about today's video sponsor and a company I'm very bullish on for 2025, and that's VZLA Silver, trading on the New York Stock Exchange with ticker symbol VZLA. And there's a number of analysts already covering this fantastic company. So I'll bring up a chart here and you compare that to the current price of $2 USD, and you can see why this is urgent in my opinion. So this chart shows why I'm bullish on silver going into 2025. Not only because of the currency wars between BRICS and members and Washington DC, but also because of the following catalyst. In each of the previous times that this chart was above the red line, let alone where it is today, silver soared. Look at 1971, 1975, 1986 and 2001. Today we are 3.5 standard deviations above the normal, and prices of silver is indeed trading in a multi-year high, but nowhere near its all-time highs, both nominal or inflation adjusted. Now gold and silver aren't popular at all yet after a generation of investors have concentrated in big tech. But with globalization taking steps back and with countries scared about their commodity supply chains, VZLA Silver is advancing a project in Mexico that is projected to start production in the first half of 2027 in just 2 years' time. And not only are analysts bullish about VZLA Silver, again that's ticker symbol VZLA on the New York Stock Exchange, but company's largest shareholders are Wall Street titan Frank Templeton with over $1 trillion under management, Sprott Inc. and Eric Sprott himself. Think about that. With 12% ownership, Franklin Templeton has a $60 million position in VZLA shares. Now, one of the reasons VZLA Silver is such a high quality company, in my view, is that while the average peer spends $17.56 approximately to produce 1 ounce of silver, the company's flagship asset has an all-in sustaining cost of only $9.40. So that is significantly and noticeably cheaper than the average, and that is a clear permanent competitive advantage. Now I want to share with you this next bit, because when I read it, I started to really get a full grasp of how special VZLA Silver is. So Mike Pepingle, Senior Vice President of Business Development Strategies, emphasizes the project's robust economics. The MPV to CAPEX ratio puts us into a large league of our own here. But the cherry on top for me was the one piece of data that I'm most proud to share with you, and that one is truly the most impressive. Now, what it distinctly shows is that Penteco, which is VZLA Silver's project, can produce 15.2 million of silver equivalent per year, making it the largest underdeveloped mine in the world. Now let that sink in. We're entering 2025. VZLA Silver has established a clear and methodical path forward toward production at Penteco, backed by a strong financial position with over 90 million in cash and no debt. Now, global silver demand is forecast to reach 1.2 billion ounces in 2024, which could mark the second highest level on record according to Silver Institute. Because silver is in a shortage and there's a notable drawdown in available physical silver stocks held in New York and London physical hubs, more so seen than in gold. Now, Shields added that silver is expected to post deficits of more than 100 million ounces over the next 5 years, with industrial demand spurring the tight supply. So look at this, VZLA is currently valued at 0.49 NAV, while producers are valued at 1.28 times. In other words, in the next 2 years, the company advances towards production on paper, the revaluation from 0.49 to 1.28 represents an upside potential of 191%. So I want you to think about that, because we're talking about a company with 60 million in cash, no debt, Sprott and Franklin Templeton as biggest shareholders, low cost, high yield project, which is going to likely be one of the top 10 largest in the world. So everyone, what do you think about all this? Make sure to do your own research and do your own due diligence. Let me know down below. Thanks for watching. You're awesome. I'll see you all in the next video.